Hey traders, welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, October 8th. I'm Michael Boutros. Good to be with you guys this morning. Pooja, Peter, we got both Pete's in the house. Jay, Eman, great to see everyone this morning. Sorry about the quick delay. And I'm not sure why my title says intraday midweek, but we'll go with it. Good to be with you guys this morning. So we'll take a quick look. This not much to really get into depth. I don't think we'll go the full hour here, but we got DXY, Euro, Sterling, gold. Okay, watch out here. Kiwi, dollar CAD. Don't really want to touch dollar CAD still, but it's interesting that it's made that rebound. Dollar yen dropped off last night. And SPX, Pete, man, this thing is ridiculous. The levels are just insane. They just keep coming. So any questions or trade setups from your end, feel free to throw them on the message board. Heading into the US trade session, you got Kiwi, top performer on the session, up 0.48%. So it's interesting that we're seeing some of these moves of the trades that we've been following. Worst performer on the session, Sterling. Sterling coming down 0.6% heading into the US Open. All these pre-market moves, the split is Kiwi and Sterling, right? Aussie's up a little bit, Swissie's up a little bit, Yen's up a little bit, Euro's up a little bit, CAD's pretty much flat so far on that move. So it's an interesting set to Tuesday trade. Now remember, tomorrow we get FOMC minutes. Again, not expected to be the biggest tell per se, but that might roil markets a little bit. CPI comes in later in the week. CAD data comes in on Friday. So you still got a lot of things that could spur some event risk alongside these headlines of what's going on in China and whether the deals are coming through or not. There's a lot to keep us attentive to. So just some notes there. But let's jump right in. Pete K says, oh yeah, let's throw oil on there as well. We'll take a quick look at that. Actually, I want to see that right now. Did that break support? Nope. Wow. Like a charm. Remember the key region of support. We'll come back to this one. 51. Still huge here. Pete Green saying, it's great. Keep it coming, SPX. You got it, brother. All right, so here's DXY real quick. Not really much to update here. I just wanted to highlight that the opening range that we talked about into the open of yesterday's webinar on Daily FX is still intact. Okay, so you're basically looking support 98.73, just lower. You have that slope, okay, for the pitchfork that we've been following that comes in around 98.60s or so. That's kind of the break I would want to see. It's Friday's or Thursday's low from last week, which is still the singular range we're trading within. And that would open up the larger decline. Till that happens, you still risk some sort of recovery in the dollar. Could get a little bit more of a jump, but the opening range is set, okay? And you're heading into FOMC minutes tomorrow and all that good stuff. So 98.70, 98.60 is the break we want. 99's resistance. Okay, a basic 38.2 was tagged yesterday exactly. So play the range. If it breaks out, you can see a little bit of a recovery, but you're still looking to fade strength. If this legit reversal that we made last week, it was more significant, as we suspect that it is, specifically because weekly resistance came off of insane slope, then we really should start to hold some resistance on the rebounds. So that's DXY. Not really like anything exciting to look at just yet. Here's Euro. So also setting up the weekly opening range. Remember where this thing is coming from on the weekly chart as well. Structural support. You really need to get through 110.20. All right, to get this thing confirmed on a larger reversal pattern, larger breakout type of scenario from the weekly chart. But nope. Here's what it looks like on the daily. So we were talking in the webinar yesterday, if you guys remember on daily, I was like, well, it's been 4 days. Yesterday would have been a 5th consecutive day of gains. It's just, unattainable especially when momentum is flatlining and you're coming into resistance and there's not much progress being made on the move. We closed lower. Okay, we closed lower yesterday on a nice little reversal candle. Didn't really give us much. You're still holding that range. Last month's open is just a level we've been watching at 109.90. Doesn't really hold that much significance, but if you know, we have been able to make one daily close above it. 110.20 is that 618. That's the sucker I want to see. He's converging on basic slope, into FOMC. Even Thursday, I would say, would still be like a confluence region for me. That's the break we need. And also, if it gets there, that's where it could be a really good failure or a choke point. I'd really want to see what price does if we get there. But till it does, here's the intraday. And here's where we were early in the week. So, the idea was to kind of look to fade weakness. If we can get it towards the median line, we want to see 110.20. If you're holding longs into 110.20, that's the level you want to start to do something at. Close some of those out, bring out that stop, look for possible exhaustion. But if we broke down early in the week, the other scenario was, I wouldn't want to play the short per se, but these are two levels right here where possible entry. Well, here's how the week played out. It slammed right into 109.66, got a little bit deeper, 109.60. Here's the launch, and then that failed on divergence. So now it puts the focus on this little consolidation range. It could still be the same exact setup from Sunday, guys. If it breaks higher, still could be a nice, close out fade type of move into 120. If it breaks lower, I wouldn't necessarily want it to get as deep as 109.25, but even 109.30s, the low day close, could be a region where, again, it would be a nice area to sort of look for another entry. The onus is on 110.20. In my humble opinion. That's the level we need to get through. So in this range, play it close to the chest. If you want to be in and out real quick, if we get the deeper setback, like I said, I think you get a better opportunity to get long. If you're holding longs and you're already in the trade, there's really, you just choke up those stops. There's not much to get excited about just yet. Hopefully we get some sort of spur, some sort of surge to get this move going. But least but all, you're at least in a pretty clean weekly opening range here heading into Tuesday. All right, questions on Euro? All right, number 3, sterling. Here's where pound sits. So this one's the one that worked a little bit better since the start of the week. If you recall, we looking for a new low essentially to fade. The best would be a spill towards 121.96. We're getting that now. The idea is you're still generally looking for the whole pullback in sterling to be corrective, but the way it's spilled off that major resistance, and let me just take you back, kind of begged a new low. Now we're heading into 21.96, which didn't hit, okay, on the opening range drop here into the start of the month, excuse me. So that would satisfy a new low. That would be the 618. And I'm looking for a reaction there. If it gets deeper and starts to accelerate, you're looking for a possible spill to the median line, but we're generally looking for this to taper off, right? That this was a more significant low. So sterling still in this really clean formation since the yearly highs. We've talked about it for a while. This is the first set right here, right off resistance. Failure again ahead of a major resistance level. We were looking at 24.30. We never got it. Turned lower. Looking for a new low here. Okay, momentum break. Just a clean setup finally. But the larger picture is that this low was a more significant one. Here's sterling on the weekly chart real quick. Right, that larger slope. This is from last year's late September high and this year's high. Leaves a little bit more room. Leaves a little bit more room for the downside in sterling. So again, the intraday chart looked like this. And here's what it looked like in the start of the week. Talked about this little near-term ascending channel formation. Basically a break below 133, 122.70s. You're looking for that move towards 121.96. Here it is. So at this point, if you're looking at the short or if you've been in the short, look to do something down here, take some off the table, bring your stops to break even or better. If you're looking for new positioning, there's nothing to do on the short side, in my opinion. you're looking for exhaustion at 2147, this region here. August open, September open, lined up perfectly with this pivot in price. You're looking for this region to start to find some support on this. Now, if we take an extension off the high, it actually drives this a lot lower. I just don't necessarily think sterling gets that low. Let's see how it looks. I mean, you're talking like 120.30s would be essentially the downside risk if it starts to break beyond, 2150, 2147 here. So take it for what it's worth. We'll take it as, we'll cross that bridge when we get there. But at this point, first essential focus right now on sterling is for this drive into 2196 and the reaction that we get down there if reached. Questions on pound. Biggest loser today, down 0.6% against the dollar. This is ahead of the US Open even. Okay, that's number 3. Number 4, let's take a quick segue into gold because that was the last one on that specific update. So anyway, no change to any of these levels, okay? All the same. All the same on sterling. Here's gold. So it's tricky here. This is what I want to say. I want to say this is still a fake out, still look to use this as an exhaustion move. I liked the break below 1494. You guys know the levels that we highlight. That was sort of the break and the sort of continuation that I wanted to see for the drive near 1482. Don't like that we've seen this. I think we do need to be cognizant of the fact that the market sell-off has been, or the market volatility has been spurred, and you'll start to hear Haven talks and whatnot, and that all tends to support, broadly support gold prices. That being said, it was such a clean setup. I just want to use caution here. I just want to remind everyone we're still below resistance at 1509. We're still below the weekly open. This is the first test. Any higher beyond this slope, and yeah, you're basically looking 1522, 1526 again. Don't forget, this is this formation has been like super clean until the start of this week. So if we do see this thing pop higher, the opening range high right now comes in, and I don't want to just draw a million lines, but it's right. Oh, the opening range high for the week is literally right at that slope, 1512. Let's see what we can drop here. What is this? Oh, sorry about that. So that being said, looking for exhaustion on this. Any Elliott count since October 1st low, Pooja says. Not a conviction count, in my opinion, Pooja. You guys know me. I'm not really huge on Elliott. If I see a standing 5-wave, 3-wave pattern consolidation and it's kind of just jumping out at me, great. On an advance like that, nothing stood out. First thing I look for is just a third wave stretch, which is not really that apparent here. You do get a decent stretch, but they all seem. It's not a conviction count, Pooja, in my opinion. If it is 5 waves and this completed 3 right now, right, then you're kind of thinking, well, if we pop through 1512, it's done. Not my favorite scenario. I would have liked to see this drive deeper, but it does complete 2 equal legs down. 1, 2, measured move, 100, 2 equal legs, takes exactly into 1488. That's where it bottomed. Could be. In fact, I'll leave that there. But for all intents and purposes, we have to just remind ourselves where we're coming from again. And this is something I just do daily. It's sickening. Um, is that the extent of multi-year uptrend resistance, multi-year swing lows? Is that the extent of the pullback? Was that it? You're still trading within that range. You're right slap in the middle. So put a pistol to my head, Pooja, I'd say that this thing still fades, or at least choke points here. One thing I would be comfortable saying is that the level is well defined. So if we do break opening range highs, we do break slope resistance, 1512 on the upside, you'd expect and want to see acceleration in price. And you'll know really quick if you're wrong, is the point. So if that thing pops, I do expect a pretty rapid run on 1522. Okay. The three wave decline may be the fourth wave. Could be, sure, in which case you'd still look for one more high to fade again. But even if that happens, fits what I'm thinking, says Pooja, exclamation point. Well, cheers. Hey, that works with me too. Even if that happens, it would still be a fade opportunity. It would still be a fade opportunity. I mean, here's the thing. If you look on this on the daily chart, and this it's again, sometimes it's best, guys, when things get really foggy like this, it's best just to go to the daily chart, erase, just don't think about anything and keep this thing as objective as possible. And a lot of times, all these setups that we look at, had you just taken a daily stance on it longer term, that's why it's good to have sometimes multiple accounts, just for reference. I digress. You look at this objectively on this like breakdown of former channel right into support. Even if it whip shots right back into here, you're still holding weekly resistance. So yeah, it's gold. There's a whole lot going on. Markets are, basically a fritz right now. So sure, 1522 resist. Yeah, Pooja. Yep. Nothing's changed. That level is still huge. Still last month's open even is 1522. All right, so nice discussion on gold there. I mean, I can't look at this chart enough, guys. I'll probably put another piece out sometime on daily effects this week, but this thing is just, and it's going to make a lot of attention. It's going to make a lot of attention. I just think there's going to be a whole lot of fake outs here first. All right, Kiwi. Pooja, I think you were talking about Kiwi yesterday as well, weren't you? Got me all interested in this thing. Aussie is still on my, on my bad list to stay PC here, to stay PG. It's just really messy. I don't like the near-term structure. We'll take a look at it if anyone has any questions. But here's Kiwi. I was looking to see if we can't get entries near 6270s, maybe 6254s. Didn't get it. Was thinking about you with this yesterday, Pooja. The pullback. Remember that level we were just looking at, 6283? Man, that was the low. Okay, that was the low. So here's the rebound, weekly opening range, right below the 50% retrace. The big level that we talked about yesterday, that's the level I really like, 63.47, 63.56. Big zone, 618 retracement, 2016 low, former swing highs. I could keep going, right? And you got slope in there as well right now. So Kiwi, just again, we didn't do the top-down approach here. I think we went through this pretty decent yesterday, but lower parallel support, there's 6340s, 6347, 6343, even on the longer term scope, just a big region. And it converges on that 25% line on the decline there. Kiwi, daily chart. Nice rebound off divergence. The third reference point is support, right down near those lows, 62.36, 62.63, probed into both of them. Here's the bounce, a little bit of pullback. Okay, you need, looking for like that, another thrust higher. You're constructive well above this zone here. This is the objective monthly open, comes in at 60, what? 62.63. That is the monthly open right there. Oh, and the low day close. I'm not sure this is just labeled wrong. Get rid of that. $64. There it is. That's your low day close. Sorry about that. There you go. So two big zones, 62.43 specifically, but the monthly open right here, that's where it's going to be basically your bullish inval. If this is going to be a larger turn, a larger bounce, or at least a near-term recovery here in Kiwi. And the weekly and the daily chart is really super clean with the way those lows registered there. So here's the intraday chart. If the ascent is proper, we kind of should hold this zone. Former swing lows, 618 retracement of the advance. The 50 converges on the 25% line. That comes in 67. That's 62.70. That's my favorite one. I don't know if we get down there. For your sake, Pooja, I hope it doesn't. I hope it keeps going, pops higher from here. But for the sake of entry, for anyone who's not in this yet, 62.93. That's where you're in from, Pooja? Yeah, if you're in from there, that's, this is your first level. 63.27 is a level just to look at as resistance and your first sort of limit. If we rupture through this, this is a really good spot. Like I said, that's my sweet spot here on Kiwi for this reversal. Now, if it doubles back, you know how I am, Pooja. I would be out already a little bit at least, and my stop's at break even. But if it doubles back, there you go. I'm with you on that. If it doubles back, weakness beyond 62.70, 62.50s, you'd look for that deeper drop. But that's sort of where I'd be looking for entries again. Would I play the shorts? Pooja says taking a small portion but holding most yet. Yeah, I mean that's how I do too. I definitely would take something off just because it hit 63.27 already, but definitely just trail it or at least bring the stop to break even, which you did. Uh, would I play this short? I'm trying to answer that question. I'm thinking in my head, no. If I'm not in this already, I wouldn't want to try to play this short because, well, let me take a step back. Depends how you're looking to play this. Do you know what I mean? If you're really, really short term, you're looking for like the U.S. opening range break. You probably could get back to 63 again or somewhere near the weekly open. Just from where we are in price, you have a really well-defined risk, I guess is what I would say. You'd be against Friday's high, but you'd be playing counter trend, right? It's very important that we always recognize that. We're obviously in this upslope right here. We're coming off of big trend support. So we're working on the assumption that we're making a larger break. So I'm all about intraday counter trend trades. Sure, go for it. I've made money on days where euro has ripped 150 pips, only playing short side exposure. Don't ask me why. Maybe just a little backwards personality, but it's all based on how near term you're trying to play it. All things held constant, not to confuse anyone in the room. The thing remains constructive. We're basically still working the assumption that this is a little bit more of a significant low we made last week. Does that make sense? I'd be happier shorting 63.50. Yes, me too. Me too. If we were to get that spike near 63.56, 63.47, I'd be happier trying to fade that than here. Make sense? Cheers. I appreciate that. Okay, dollar CAD. Oh, dollar CAD, this thing. At some point, you kind of just need to throw your hands up. So remember what I was saying yesterday? It's sort of ideal. Well, here's the thing. It came right into support and bounced, right? We talked about 32.88. We talked about 32.84. Those are the levels that we were looking for as far as some sort of support here for dollar CAD. This is Kiwi unchanged on those levels. Here's dollar CAD from last night. So the zone was right here. Is that longer term 618? The 100 off the high, so two equal legs would have executed at 32.84. Didn't really get the 32.84, but you registered a low literally right there. 32.87 was the low. And here's the result. We've covered the entire weekly opening range. We're heading into Tuesday. CAD has some event risk later this week, again, with the employment data on Friday. But yeah, I mean, what can I say about this? Let me show you the daily chart. It's a pretty well-defined range. 32.88 support, 33.55. We'll extend that. The 33.35 level, guys, is the last month's high day close. So I don't want to ignore that. I also want to note that it's just pips away from this last stretch high day close for this month. So I just want to watch that 33.35 area, but it's 33.55. That's the break zone. And obviously you have clear cut support. We bounced off it yesterday. So listen, it's a range played as such. Kind of would have rather seen this thing reset higher to fade 33.55 or even 33.80 on an intraday spike. If you look at the cursor there heading into the end of the week, you're basically looking near Friday, Thursday, Friday, where that converges on the 100% extension. So if we're coming off two equal legs off the low on the upper parallel, sort of a nice spot for like a exhaustion fade. I mean, this thing, I feel like it still needs to make that last final washout higher before we see the bigger turn. Look, at the end of the day, I don't want to confuse it. The support is there, 32.84, 32.88. That's the support zone. If we get the downside break, the levels are very clean, 66 and 50. This is just a soft target. It's really this zone, 32.40 and 32.50, this zone right here. You'd start to look for stronger support. You'd start to look for an exhaustion low. You'd start to look for some sort of entries under the assumption that we've broken, this declining move here. So we'll see with dollar CAD. I'm a little thrown off at it by just the fact that we didn't even get a deeper drive on this move into 32.84. So watch out. Watch out. Ideal scenario, it pops higher, gets near 33.50 or even exhausts near 33.80 and then comes back again. Questions on dollar CAD? All right. And the abomination. Here comes dollar yen. Dollar yen last night looked like this. Two levels. Looking for failure here at 107.45 is pretty much the layup, or 107.71.84. There was a nice confluence region up here where it's defined by the 2017 low day close and Fibonacci resistance and slope resistance. Long story short, obviously the 618 held at 107.45. You made another attempt in overnight trades. They had another opportunity to try to get into this if you missed it in early, I guess pre-Europe in Asia last night. Complete failure. Drop right into the confluence region. I'm not sure why my highlight there moved yesterday, but right into that confluence region of support, and that's where we're finding support right now. So opening range for the week is set. You're testing weekly open support right now. Downside break from here does put the resumptive move back into play towards 106.46. And more importantly, you guys know the level we talked about it yesterday for a while, 106, 105.99. Okay, that's the 618 retracement. It's the September open. It's the lower parallel, you name it. And that's actually, sort of a decent zone for dollar yen, a pair which typically doesn't give us this kind of clarity for long. Okay, we still got to clear this zone. Still got to clear this on a closed basis to get this thing going. There's that target at 106. Dollar yen on the weekly chart looks like this. Again, 106. Lo and behold, the low week reversal close comes in at 106.24. Level to be mindful of on weekly resistance basis. Weekly resistance momentum still in play, right? Almost a year long now. Things are getting interesting. Things are getting interesting, and for uh, dollar yen to be giving us this kind of clean price action, I think we need to be paying attention to it pretty nicely here. So, like it lower, generally speaking, you are coming right into support right here, right now. So if this thing jackknifes, higher into the U.S. trade session, or you see a little bit of recovery, resistance, somewhere entries in this zone, let's call it like just above the 107 handle. I'd even get as tight as to drop a 618 on this and see where that is if it starts to bounce. But you're essentially looking for a downside break, the weekly opening range, just support. Let's start breaking this support level as far as this upslope, as well as the median line. Once we get below this, 106.46, and then 106 is on tap. Bearish inval. Bearish invalidation? I'd probably listen. I have to leave it at 107.70 for the sake of slope. Okay, but if we get through the weekly opening range high, I'd say that's invalidation for the near term bias. Does that make sense? Okay. All right. So that's dollar yen. It's provocative. I'm loving it. I'm loving it. I missed this drop here, but I always, sometimes even if you're not in the trade and the market just moves in tandem, this reaffirms the outlook that we've been working with. Last but not least from the list is SPX. So this thing is ridiculous. I should have just been an SPX trader all week long. This major region that we talked about in the webinar yesterday, it wasn't there yet. It was just trading below it. It was 29.59, 29.60. We talked about it for a while. It's the May highs, the 618, nothing magical about it. But that ridiculous slope that we traded for like 3 weeks, the upper parallel was there too. So it gave you a time value of we should be seeing something there, right? Well, here it is. What a move yesterday. Even on a 2-hour candle, you made an outside hourly reversal. Even on a 1-hour candle, looked pretty darn hard, like it slammed into resistance and slammed lower. Here's the 240 outside reversal candle. Not an outside reversal, but a pretty big reversal candle closing at the lows. But you get the picture. So you got some candlestick formations. You got really stern and strong reaction in price. That was a level that we had highlighted as significance. Former swing lows, 618 retracement, the May high, slope resistance. Here's the drop. Even on the second rebound here, a short against that high would have been a very, obviously, would have been a decent move, but here's the move. So look, don't get, too crazy with the slope anymore, but if you remove this 38 too, what I wanted to show you is look at the low we just registered. Same slope, same slope, same slope, same slope. You know what I mean? So if we have in fact entered back into this sort of gradient, work with it. Work with it. That would put that would have me looking at something like this. Bear with me one sec. I just want to see what this looks like. This is going to get messy. I just want to see. Yeah, sick. I mean, we could get super granular here. I don't know how close near term you guys are trading this, and I can get as deep as you want, but all right, look at this. Immediate levels for today. Okay. I'd still be paying attention to 29.30 or 29.29. You know what I'm talking about, as that pivot in price that we've been following. But kind of exhaustion needs to happen ahead of 29.41. This is the 618 of this recent drop, and the reason I would use this is because of where we are in price. We're already a percentage off the low, and we've already closed, a 2-hour candle well off that low. But in any event, the 618 29.41 would be near-term bearish inval. Support 29.08, 29.10. Okay, Pete, that's the next pivot drop. The big levels is still 28.92, 28.95. That's still like your major um, sort of resumptive pattern for the larger move. And that coincides, down here with basically a break back below or a move back towards um, daily slope resistance. Daily slope resistance. Pete, does that help? So bottom line, Pooja says 29.08 is monthly S1. 29.08, sweet, right on. Thank you, Pooja. The monthly S1, that's even, pour some sugar on it. That's the spot. So 50% of the range, 1618 off the decline there. You have, again, that slope is just uncanny and has been so fruitful. Again, look at the breaks, right? So even when you did see break, you saw an accelerated move to the downside. Again, here a break, accelerated move to the upside. This whip would have me think that you could see a little bit of recovery here. Long and short of it, though, that's a big level. 29.08, 29.10. Peter says, love it. Thank you. Hey, you're more than welcome, sir. It's not my level, it's the market's levels. I'm just helping you find them, man. These things are, this SPX thing has been freakishly clean. All right, so that's SPX. The request for oil, who was that? Let's take a quick look. This is for PK. Here's what crude looks like. So the big zone, and I don't need to repeat, I think you all know where I stand on this one. We can't really do much. How do I say this proper? We can't really do much on the short side while above 51. Okay, even though I do think it's going to inevitably break lower. You have to wait for the pivot break below that. It could rebound here. It could rebound here. You're at support. Like, what do you do at support? Even if you're bearish, do you sell into it? Not my cup of tea. So it needs to give us some sort of recovery to participate back on the short side. You're on the back of a pretty nice 3-week decline here. I mean, obviously we just started the week, but 2-week decline. But the massive stretch off the high is already a pretty pretty big, like 14, what is this? 16% drop in 3 weeks. So look, this weekly chart has been all the guidance that you've essentially needed for the last couple of weeks. Key resistance is still 60. Key support is still 51. Downside break beyond 51 on a weekly standpoint opens up 48.24. Okay, that's the low week close for the year. It's on big, major, multi-year slope. That's really the risk with a pivot back below 51, but it's all about this region right now. Now, interestingly enough, what I want you guys to watch this week is this support trigger, which we've been watching off the lows of the year. This consolidation, this coil up in momentum has been really pronounced and profound. So this break that seems to have given out didn't give us a break in price. And remember, these only matter when there's actually an invalidation or a break in price as well. There's been no break in price. We're still sitting at support while momentum has obviously found, at least trying to get out of this coil range. At least trying to get out of this coil range. So what do you do from here? Well, here's crude on the daily chart. Even this basically just puts you at range lows. 618 retracement from the decline off the high, that gives you 51.67. The low day close from August gives you 52.29. I've been using that sort of as a range of support, if you will, and on a daily chart, there it is. You know what I mean? On a closed basis, this thing can't even probe below. So I guess what I'm trying to say, Pete, is kind of need to know where the juice is at. You kind of need to know what's worth your time. I don't really see that crude for me is a huge opportunity here. This is the chart I showed you guys yesterday, and in my opinion, the play was for 54. You guys know exactly. We talked about this level. I'm not even making this up. We talked about this level, and we talked about, well, if this breaks out, you have room till $55, 55.70. Why not? It'd be just a near-term recovery. You tell me I can't make a 38.2 after this kind of decline, but it held. It held. So if you were holding longs, or if you played that into that level and you closed it out, or you left a little bit on, the rest got stopped out at break even. All you have to do now is wait for a break of the weekly opening range, which is set right above key support. Meaning if you get the 54 break, it's still the same exact play. Nothing's changed. And if we get the downside move, well, there's a lot of room. Again, 48 and change would be like your first target. I got a soft target there at 50, guys, but that's just an eyed out swing low there, if I recall. Yeah, that's just a soft target. So look, I don't want to make any assumptions here. My Pete, K, my humble opinion, it's still a bearish trade. I do inevitably want to see a 51 break, but you're at downtrend support. So on this bounce here, if you get the bigger rally towards 55.70 and you're a medium-term swing trader, that's what you want to sell. If you're holding shorts, anything north of 58, this is just noise, okay? Your stops should be just above 56. You're looking for that next move lower. You should have taken something off at 51, but you're looking for the next leg lower to get you that 48 handle. And if you're looking for an opportunity on a scalp, you might actually find a decent fade here if we probe into 51 and fail for the breakout of this channel, play the recovery, and then again, larger sell on that. Does that make sense, Pete? He says, thanks, exclamation point. Cheers, man. Yeah, I don't want to deter you from taking anything on this, but for me, the big thing was the bounce here into here. The fact that channel resistance held just means, well, you got to look for a break of the weekly opening range for guidance. You're right above key support. All right, and again, the weekly chart, ominous. If this break materializes, and this is the 38.2, by the way, okay, a 38.2 parallel of the range. Look at the wicks we got here. If this breaks, and the fact that it converges on that zone, Geronimo. Okay, any other questions before we wrap things up? That is number 9. All right, well, we'll wrap it up there. Don't forget, tomorrow we have Jamie on board for the midweek strategy webinar, and we'll be right back here on Thursday to wrap us up for the week and to give us a quick preview of especially where dollar CAD is ahead of that employment data. I'm really interested to see how this pans out. Again, ideal scenario, it fades higher and then we fade it from there, but let's see how this pans out. Best of luck trading, guys, and I'll see you on Thursday. Cheers.